Good afternoon, everyone. Welcome to our webinar series titled Winning with Charts. This is part one, and we will have part two next Wednesday. So before we start, we want to do a little game, a chance for everyone in the Zoom or Facebook to win a prize. So let's start by asking the first question, Jarrod.
Okay.
So wait, before we start, actually, sorry, the mechanics of this is that the first one to answer correctly will win the prize.
Okay. So let's see the first question. What do you call a price level where prices has shown buying pressure in the past and has bounced from? Okay. Go chat your answers. Okay. I think I already saw the first answer. It's from Linton Lim. Yeah, so congrats. How can he claim his prize?
You can claim your prize by messaging the Facebook page, facebook.com/DragonFiHQ.
Yeah, so congrats. So, okay, naka-warm up na lahat. So, get ready na for the second question.
Before you send in your answer, Jarrod will count down and then he will say go, and then you send in your answers.
Yeah, okay. Or wait, I'll chat a line. Yeah. Okay, so ready? So, what's the second question? What do you call the event when price pierces through a resistance level? So, wait, wala pa. 3, 2, 1, go. Okay. Who do you see got it first, Franco?
Noel was the first one to answer
After
Jarrod said go.
Okay. So, congrats.
But everyone got it right, so.
Yeah. Oh, I saw here, bazooka. Joke. Okay. So,
all right. One more question.
yeah. So, after I read the question, I will count to 3, then I will send the line. So, you have to answer after I send the line. Okay, if you answer before, it's not counted. Okay, so ready? Next question. So what kind of trend does a stock exhibit if it shows higher highs and higher lows? So 3, 2, 1, go. Okay, who's the winner, Franco?
Oh wait, where's your line? The first one to get the correct answer was Jeanette Gomez.
Congrats.
Congrats.
Grabe. Quick fingers, ah.
All right, so to unveil the prize that you'll be getting, the 3 winners will be getting this water bottle.
Wow.
Yeah, so message the Facebook group, Facebook page of DragonFi at facebook.com/DragonFiHQ. All right, congratulations, and let's get into the webinar topic. All right, so let me first walk you through what we have prepared today. So for part one, we'll be covering the core technical indicators that every trader should know. We'll break down each one, like volume, moving averages, MACD. And as an added bonus, we will be talking about a Fibonacci retracement tool. Now, it's not an indicator, but it's a very helpful tool, a technical analysis tool that we have used in the past and wanted to share with everyone and how we use it. So at their core, all these technical indicators serve more or less the same 3 purposes. They are used to identify trends, they're used to spot momentum and trend reversals, and they are also used to generate buy and sell signals. So remember those 3 main purposes. Those are more or less how the indicators are used. Then in part 2, we will be putting everything together. We'll show you how to combine these indicators, identify key confluences, and create a solid trading plan. We'll even touch on how to blend these technical tools with fundamental strategies for a more complete strategy where we combine, well, technical analysis and the fundamental analysis. All right, so let's start with the first indicator. So the first one is volume, because it is the most important indicator that every trader should understand. It's in every chart by default. So it's very simple and easy to understand. So volume tells you how many shares were traded during a given period. If your chart's time frame is daily, then it shows you the volume for that day. If it's in an hourly chart, it will show you the volume for that hour. So it depends on the time frame, but more or less, you'll normally see a volume on a daily time frame. So it's always at the bottom, although you can edit it, you can move it around any way you like it, but more or less, by default, it is below the candlestick chart. So the tall bars essentially mean there's high volume, and the short bars mean that it's low volume. And then if you notice closely, you'll see some dotted lines. Essentially, that is a 20-day moving average. It helps you quickly spot if the volume for a specific period is above the average or below the average. It's essential for spotting good breakouts or breakdowns. And lastly, if you want to figure out what the volume turnover is, value turnover is for that day, for that stock, you simply multiply the volume times the share price. And then in the next slide, volume is used to confirm breakouts and breakdowns. So this is very important, especially when you want to trade a breakout and or validate a breakdown. So when a stock breaks above a key resistance level or support level, volume will always play a critical role. A breakout with a high volume, like the one highlighted here in this image, has a higher chance of succeeding, because that means more traders are participating and validating that move. On the other hand, if a breakout happens on low volume, it's often a red flag because there's a lack of participation. It may signal a fake out, and you may end up getting your stop loss might be hit. And then the price, of course, will continue to reverse. So before jumping into a trade, because you want to trade a breakout, always check if there's supporting volume. If not, you might want to rely on other indicators or just hold off, because the chances of it succeeding is less likely. So a perfect analogy is for volume is thinking about fuel for your car. So volume is the fuel that powers a stock's move. Just like a car can't keep running without gas, a stock's rally can't keep going without strong volume. So if price breaks out, but there's low volume, it's like stepping on the gas of a car, on the gas without with an empty tank. So the move will not last long. But when a breakout happens with high volume, that's a strong signal. That means there's a lot of fuel to sustain the move. Next. So here is an example of a breakdown. If you see the circles, it indicates that on the break of the support, there was a significantly high volume, more than we've seen in the past couple of months for this chart. So this tells you that it's likely that the breakdown or the downtrend from sideways will likely happen. And obviously, since you can't easily short in the Philippines, you would stay away from this kind of stock. Next indicator, something I personally use every single time. It's called the moving averages. So this is what a moving average would look like. So it's essentially a lagging indicator. It's a trend following indicator. So in the next slide, I'll explain to you what it is and how you can actually compute it if you were curious. So as mentioned earlier, it is a trend following indicator, meaning it will help you identify the overall direction of a stock, whether it's moving in an uptrend, downtrend, or sideways. So how it works is that So for example, if you are using a 5-day moving average, if a stock traded 1 peso on Monday, Tuesday, 2 pesos on Tuesday, 3 on Wednesday, 4 on Thursday, and 5 on Friday, if you add those up together, divide by 5, since it's a 5-day moving average, you would end up with 3 pesos on that day. So there are two types also of these moving averages. The first one is what we call the simple moving average, or SMA for short. Essentially, it just gives you the equal weight to all these days, as I demonstrated just earlier. And then there's something we call the exponential moving average, or EMA for short, which puts more weight on recent prices to react faster to new data. So essentially, the formula is a bit different because the EMA basically just adds a weighted calculation to its formula, putting more weight on the more recent price data. But essentially, they do the same thing. The main purpose is still the same, except that you'll notice if you actually compare it, the EMA is actually closer to the more recent stock price because, as I said, it uses the more recent price data. But deciding whether to use SMA or EMA is completely up to you. Depends on your trading strategy or style, because at the end of the day, it will tell you the same things. Although EMA will have you may see the price cross the EMA fast sooner than the SMA because it uses the more recent price data. On the next slide, what you're seeing here are the most commonly used moving averages. So it's color-coded. All the moving averages are color-coded. So in this example, the 20-day moving average, this 20-day simple moving average is the blue line. It's the short-term trend. And then the 50-day moving average, the yellow line, is the medium-term trend. And then the 100-day moving average, or the pink line, is the long-term trend. So essentially, they will just help you identify key trends and if a trend is about to go sideways or break out to the upside or to the downside. Although you can, aside from these three, you can add the 200-day. Personally, I always add the 200-day because there are instances where price will dip below the 20-day, 50-day, and 100-day only to get supported at the 200-day. And if you want a perfect example of this, you can check out Mineral Water or more chart a few months ago. You'll see that it did find strong support in the 200-day moving average. So using any of these moving averages is okay. You don't have to use all of them. It's up to you. But essentially, if you're tracking the short-term trend, you want the 20-day or lower, like the 10-day if you're doing maybe intraday trading. 50-day if you're more like a momentum swing trader. 100-day to 200-day, you're a long-term investor. That's essentially how investors would use these moving averages. And then essentially, if the price is above the moving averages, it's in an uptrend. If it's below the moving average, it's in a downtrend. And then if you see it all tangled up together and flat, it usually means the market is in a sideways or it's consolidating with no clear direction. Next is how to use these moving averages dynamically. So these moving averages act as key dynamic support or resistance levels. So in this example, we're looking at FLI, which is commonly used for we're using the 20-day, which is commonly used for short-term trend support. And if you see on the chart indicated by this, the circles, price keeps bouncing off the 20-day moving average multiple times. It means that the buyers are stepping in to defend that price level, solidifying it as a reliable support area each time. So it's acting as a floor, helping the uptrend stay on track. But once it breaks down or below the moving average, you'll see that it can be an early signal that the trend is weakening, momentum is starting to fade, and it might be a good time to get out of your position. So that's something to always keep in mind when you're using these moving averages. Next is the 50-day moving average, which is more of a medium-term support. If you see here, price tends to snap back like a rubber band, because if price stretches too far or rallies too far from the moving average, you can always expect at some point the price will always revert back to its average or the mean. It's takes from the mean reversion. So it's known as the rubber band effect in this example. But now the question some may have is that which moving average should you use, right? Because earlier I gave the 20-day and now I'm giving the 50-day. Well, the answer to that is you need to observe which EMA price consistently pulls back to and touches during the uptrends or downtrends. That moving average is most likely the one that will be most respected by the market and will serve as a more reliable guide. So basically, you can count the number of times. I mean, if you put all the moving averages on the chart, you'll see, you'll be able to observe that, oh, so price keeps pulling back to this level, to the 50-day moving average. So that means I should follow this more closely than the 20-day or the 100-day, because once this breaks, that will give me a signal that the buyers have stopped coming in and that momentum and participation is starting to fade. Then on the next slide, I have an example of a downtrend this time. So same concept, same principle. You can see that the moving averages has repeatedly rejected price every time it tried to rally. So each time it rallies, it reverses lower from the MA. So this tells us that sellers are stepping in around that level, using it as a reference point to take profit. However, if price manages to break above that moving average, it could be an indication that the current trend is reversing and that the downtrend might turn into an uptrend. So again, observe which MAs the price respects the most. It often gives you valuable insights into the market behavior and trend strength. Now, the next indicator is the MACD. So this is what the MACD looks like in the chart. So it consists of what we call a histogram and two lines, which I will tell you about in the next slide. So MACD is an acronym for moving average convergence divergence. It's pretty long to say every time, so everyone pretty much just calls it the MACD. So it's a trend following momentum indicator that helps you spot trend reversals and potential buy or sell signals. So pretty much the same purpose as any, but the use of it is a bit different. So let's break down the parts. So the first part is the MACD line. So it's a difference between the 12-day EMA and the 26-day EMA. In this context, for the MACD, the 12-day EMA is the short-term EMA, while the 26-day EMA is considered the long-term EMA. It essentially just gives you a sense of momentum, how fast or strong the trend is going. And the next one is called the signal line. It's a 9-day EMA of the MACD line. It acts as the signal because once the MACD crosses above or below, it will suggest a bullish or bearish move and it can signal a buy or sell. Lastly is a histogram. It's basically the visual representation of the difference between the MACD and the signal line. On the next slide, I'll show you what I'm referring to. Okay, on the next slide, here in this slide, the red and the green bars are basically the histogram. They are the difference between the MACD line and the signal line. And the MACD line is the here, and then the orange line is your signal line. So if you notice that it tends to cross, right? So when the MACD line crosses above the signal line, the orange line, it can signal a bullish reversal and potentially an entry point. And then when the MACD crosses below that signal line, it can become a bearish reversal or a sell signal. But keep in mind that this is a lagging indicator, meaning that you will only see the cross once the price has made its move, right? So always remember that. So now I'll also show you how to know whether or not a stock is in an uptrend or downtrend with this MACD indicator. So when both the MACD line and the signal line are above the zero line, basically the middle point, and it's in the green zone highlighted here, it means that the stock is in an uptrend. On the other hand, if the MACD line, signal line are below zero, that means the stock is in a downtrend, and it signals negative negative momentum is taking over. And next is an example, a real life example of the use of MACD. So during an uptrend, the MACD of BDO, this is BDO, has stayed above the zero line, confirming the bullish momentum as the stock has continued to rise. But when you see the cross, right, around the end of 2018, that momentum has started to shift to the downside. And then the MACD the MACD line and the signal line has gone below zero, indicating that the stock is now in a downtrend, trending to the downside. So the shift below zero often acts as a warning that the bulls are losing control, and it's time to watch for a potential breakdown or a bearish trend to follow. But this only works best during trending phases. On the next slide, I'll show you that it's not essentially helpful when the market, on the next slide, is trading sideways, right? So this is macro Asia. On the long term, if you look at it from the big picture, it's essentially trading sideways. And that MACD is not essentially that helpful unless you zoom in on certain time frames, and then it becomes more reliable. But bigger picture, it's harder to tell when it's trending sideways. So that's because MACD is a trend following momentum indicator, right? So obviously it will work best when there's a trend and there's clear momentum. So yeah, so when you see something like this, if you zoom in, actually, you'll see that the MACD, every time it crosses, it ends up in an uptrend, and then when it crosses below, it has a short-term downtrend. And then on the next slide, as I mentioned earlier, MACD does give you lagging buy and sell signals every time the MACD crosses the signal line. So here are some actual examples of BDO. So for example, you will see indicated by the green colored lines. For example, on October 12, you see the MACD cross above the signal line, leading to an uptrend. And then following month, in November 17, on the red line, you'll see that it crossed below the signal line, indicating a potential pullback or consolidation. And then when it crossed again, you have another uptrend, and so on and so forth, until the other example, which is the same actually, where in November, I think that's November 7, sorry, you see that the MACD crossed, and then that is an indication of potential buy. But essentially, it's not always perfect, because if you executed that level, you would basically be trending a bit to the side with downward bias, because by November 7, it did have a short-term sharp pullback before actually rallying. So MACD is not always perfect in giving you these buy and sell signals. So that's one of the drawbacks, right? So once it crosses, it's not always necessarily a buy. You still have to confirm your biases and build strong conviction before you execute. So always be careful when you use a lagging indicator such as a MACD. So the next one is stochastic indicator. It's a momentum indicator, and then this is what it looks like on the chart. Yeah. So it's a very useful tool. I use it specifically for identifying potential buy signals. Essentially, what a stochastic indicator tells you, it basically helps you identify oversold, overbought levels, and also as well as trend reversals. These are the main two purposes of the stochastic indicator. It's particularly helpful for spotting short-term turning points, which will then lead to buy signals and sell signals. So this stochastic indicator has three parts. The first one is called the percentage K line. Essentially, it just shows you the current price, where the current price is within its past 14-day high-low range. Although you don't need to memorize what it does, I'll just show you later how you use it. Next is the percentage D line, which is a 3-day moving average of that percentage K line, similar to the signal line of the MACD. So essentially, the percentage D line is your signal line. That's all you have to remember about that. And then lastly, it's the range. So the stochastic moves within a range of 0 to 100. A reading above 80 means the stock is overbought. Reading below 20 means it's oversold. But when it's overbought or oversold, it doesn't mean it's a sell or a buy. It just means that price moved up quickly and may be due for a pullback or a bounce. Yeah, so on the next slide, here's what I'm referring to. So the blue line is what we call the percentage K line, and then the orange line is your signal line. So similar to the MACD, when the K line crosses below the signal line, it mostly likely indicates a trend reversal in the short term or the long term, depending on your time frame. When it crosses above, that means there's a shift in the trend. It might turn from a downtrend to an uptrend. And then the overbought and oversold levels look like this on the next slide. So when, as mentioned earlier, when the stochastics go above 80 on the red zone, it means it's overbought, and there may be buying exhaustion, suggesting a short-term move to the downside because momentum is starting to reach its maximum point where it has to correct before it can continue going higher. And then the opposite side of that is the oversold. When it crosses below 20 on the green zone, it's oversold, suggesting there's selling exhaustion and that a move higher is more likely. Buyers will step in more likely, most likely due to bargain hunting at these levels. So these zones help you time entries and exits more effectively if you use them as buy and sell signals, especially if you combine them with support and resistance levels in the stock chart. And here's an example of that. So here in this example, we have combined support resistance levels and the stochastic indicator. So this is one of the examples we'll be talking about more in part 2, where we combine this indicator with other technical tools and indicators. But essentially, if you notice marked by the vertical lines, so first in January 15, so this is macro Asia. So once the stochastic hit its turning point at the overbought level, when the percentage K line crossed below the signal line, it started to signal a shift in momentum. And eventually, in hindsight, we see that the macro Asia has corrected to the downside back to its support in 410. So here, the turning point of the stochastic was in confluence with that resistance level at around 6 pesos. So the other examples show the exact same thing. When it hit support around during September 21, the stochastics hit a turning point to the upside where the percentage K line crossed above the signal line, signaling a potential entry point. So this one eventually led to an upside uptrend all the way back to 6 pesos before the same turning point earlier happened where it moved back to the downside. So each time the stochastic enters a overbought territory or near resistance level, we see price pull back, and then when it drops to oversold levels, we get a bounce. So that's essentially how we use the stochastics indicator. Now I'll be handing you over to Jarrod, where he will talk about the other indicators.
Okay, so we'll now move on to the next set of indicators. So first, we'll start with RSI, or the Relative Strength Index. So
Indicator.
yeah, indicator, I mean. So here is the RSI. So it's an oscillator lang. So it sort of looks like the stochastics, but it's just one line rin, right? So unlike stochastics, it's like two lines, right? But here's how it looks like on the chart. Next. So let's discuss what the RSI is. So it's also a momentum indicator. So it can identify the strength of the price movement. And similar to stochastics, it also identifies overbought and oversold conditions. And as a bonus, it can help identify trend reversals. So let's look at the parts of the RSI. So first is the RSI line. So that how it's computed is it looks at the candles there are, the higher the RSI level will be. The more red candles there are, or the more down ticks, the lower the RSI line will be. Oh. Then essentially, the overbought level is 70 and above. So if the RSI line goes above 70, it's overbought. If it goes below 30, it's oversold. Then as a rule of thumb, in a trending stock, the RSI usually stays above 50 when it's in an uptrend. Then if it's below 50, usually that's when it's starting to downtrend. And if it's medyo parang chopping up and down the 50 level, around that level, it's usually consolidating or moving sideways. So next slide. Let's have an example. So here is the RSI. So once it's above 70, that's the overbought level. Then once it's below 30, that's the oversold level. And notice this is plus. So notice na whenever the stock is in an uptrend, the RSI is usually above 50. Then during some periods of time when the price does a deep correction, parang it usually goes below the 50 level, but it strongly bounces back up once it starts to trend higher again, back above the 50 level. Then if you notice when it's moving sideways lang, it tends to chop around the 50 level. So that's the characteristics of RSI. So next. So here is how RSI works during a sideways trend. So it's very similar lang to stochastics, where if it's oversold and in a support level, that's usually a good time to enter, because it's parang confluence, it's a bounce off support and oversold. Then in the same way, if it's at resistance and the RSI is overbought, that's usually a good time to sell, because there's confluence. It's resisting off resistance, and then the stock is overbought. So that's a added confluence for the stock to drop. So next. Then the added feature of RSI is divergences. So it doesn't just show whether it's overbought or oversold, or whether the momentum is strong or not. It also helps identify turning points in the market. So this is what we call divergence. So divergence is when the RS line does the opposite of what price is doing. So example here in East-West Bank, there's a lower low on the price, right? So the low is lower than the previous low. But if you notice the RSI is higher than the previous low. So even if price has a lower low, RSI has a higher low. So that's what you call a bullish divergence. So what does this mean? It means that the bearish momentum, medyo humihina na siya. So that means that it is likely that there's a probability, it's not 100%, but there's a probability where the stock may reverse from that point because it's very oversold. And during the new low, there's less bearish momentum. So that usually results in a bullish reversal. So next. So the opposite of the bullish divergence is the bearish divergence. So here, even if the stock is uptrending, we see that there's a higher high in the price. But if you look at the RSI, there's a lower low in the RSI. So that means that even if the stock made a new high, the bullish momentum is starting to fade a bit. So when that happens, usually it's a signal where you may want to sell a bit or maybe trim a position since price is likely to stall. So baka it might pull back or it might just move sideways, right? And form a base. So that's what it means. If there's a bearish divergence, it means that there is some weakening of the bullish momentum. Pero it doesn't mean naman na even if just because there's a divergence, that means it's going to start a downtrend. Not necessarily. Sometimes it just takes a breather, parang deep pullback, then it will start another uptrend after a while. So just because there's a divergence doesn't mean it's a sell signal to sell your whole position. Maybe it's just a signal to sell maybe a half or like 1/4 of your position, then try to buy another tranche on the pullback. So that's how you use RSI to identify divergences. So next. So the next indicator is my favorite actually. So it's called the Bollinger Bands. So let's look into it. Next. So for Bollinger Bands, this is how it looks like. So you have 3 lines, which I'll explain later. Pero think of it as it's like a channel where you have a upper bound, you have a lower bound, and the middle is like the mean or the average. So price usually stays inside that range, but sometimes it expands beyond it. So next. So what are the parts of the Bollinger Bands? So first, what are Bollinger Bands? Think of it as mean reversion. So you have the average, then sometimes prices, they shoot higher than the average. Sometimes they shoot lower than the average. But at the end of the day, they usually tend to stay near the average. So that's what you call mean reversion. Then you also have what you call the upper and lower bounds. So if price stretches out too much or too far from the moving average, it tends to snap back. So what this indicator measures is the standard deviation. So how far away from the mean? Because if it reaches a certain threshold na masyado nang malayo from the mean, it tends to snap back. So what's the mean here? So the mean is simply the 20-day moving average. So that's the average price in the last 20 days. And then the upper band is 2 standard deviations above the 20-day moving average. The lower band naman is the 2 standard deviations below. So essentially, you can think of it as yung lower band, that's the oversold level. Then the upper band is the overbought level. So there, next. So let's see how we can apply it in the chart. Here is how it looks like. So like what I said, the middle line is the 20-day moving average. The one on top is the upper bound or the upper band. Then the lower one is the lower band. Next. So another useful way to use Bollinger Bands is measuring volatility. So how does it measure volatility? You have to look at the width of the bands. So if the bands are wide, that means it's high volatility. Then if the bands are shrinking or very tight, that means there's low volatility. So of course, when volatility is high, you can expect the price swings to be greater, diba? So maybe on average, if it's on a high volatility, each uptick could be mga 4%, maybe 5%. But if the bands are kind of constricted, maybe average volatility mga 1 to 2% lang in a day. So that's how you see it. So markets, they move from periods of high volatility to low volatility. So it's always changing. Next. So here is an example of how to use Bollinger Bands during a sideways trend. So like what we said, the lower Bollinger Bands, that is the oversold level, right? So during a sideways trend, it's a good buy to buy when price hits the lower Bollinger Bands. Then it's also a good, then once price rallies and then it hits the upper Bollinger Bands, usually that's a good time to sell. But that's best used in a sideways market, or it's not uptrending, it's just moving in a range. If that's the case, then Bollinger Bands works. So there, next slide. So next, this is how we use Bollinger Bands in a trending market naman. So Bollinger Bands, they don't just work in a range. It's actually very, very effective during breakouts. So how this works is, if the Bollinger Bands is very tight, usually the first candle where it closes above the upper Bollinger Bands, that's a good breakout signal. And what happens is, once it closes above the upper Bollinger Bands, there's a follow through and it starts to expand the volatility. And that's usually when you get the explosive breakout moves higher. And like here, for example, this is GMA7. If you notice that candle there, once it closed above the upper Bollinger Bands and after a tightness in the Bollinger Bands, you can see that the price really rallied from there. Then once it broke out, you see that the bands, they're already expanding, right? So that means volatility is getting higher. So next. So here is the opposite. So prices, they can also break out to the downside, right? So this is Agri-Nurture, ANI, right? So once it closed below the lower Bollinger Bands, that was the signal to exit, because that was the start of the downtrend, right? So once it broke below that lower Bollinger Bands, it started to expand volatility to the downside, right? So you can really see how powerful Bollinger Bands is. Basta it constricts, that's already the turning point. So you're just gonna wait. Is it gonna break out higher or lower? Then usually those are one of the best breakout trades. Next. So here is an example of one of our trades in the strategic growth portfolio. So this is Plus. So here you can see that after a period of high volatility, in Bollinger Bands, they constricted, diba? They became a lot smaller. Then from there, we just bought at support, right, at the 20 peso level. Then we just waited na lang for price to break above the upper Bollinger Bands. So let's see what happened. So here, what happened was we patiently waited and we finally got a breakout candle that closed above the upper Bollinger Bands. Then here you can see that after that, there was a lot of follow through, right? So this was actually a 31% move, right? And we were able to sell our position at 26.50. But of course, it did rally higher. But here, it just proves the point that the best breakout trades or the momentum plays, they happen when the Bollinger Bands are very constricted. So there. Next. Here is another trade that we did for the strategic growth portfolio. So this is PNB, Philippine National Bank. So after a rally, right, you can see that the price started to consolidate, right? Then the Bollinger Bands is started to constrict. Then once we saw that the price closed above the upper Bollinger Bands, that was a signal already to buy the breakout. So next, let's see what happened to PNB after. So just like Plus, right, there was a follow through, and this was a 39% move. And we ended up selling at the first major red candle, so around 41.85. So here, this just shows that breakout trades from constricted Bollinger Bands are really one of the juiciest trades that we always look forward to. So next. So next is not an indicator, but more of a tool that we use that's not really commonly used, but it's a good tool to have. So that is the Fibonacci retracement. So next. So what is the Fibonacci retracement? So Fibonacci retracement is, think of it as example, if the stock rallies 100%, you're trying, and then it's trying to make a higher low. Parang you're trying to measure what's the possible levels where it could bottom out or settle down, right? So, example from, if it makes 100% move, if it pulls back 20%, right, then the Fibonacci level there would be the 80%. If it goes down 50%, the Fibonacci level will be 50%. So think of it that way. Like, if it makes 100% move, how much of that move will it give back to form a higher low? So that is what a Fibonacci is all about. So it's helpful in finding higher lows, pullback entries, and it's also good for setting target prices, which I will demonstrate later. But one of the key levels in Fibonacci is the 61.8% level. So this is what we call the golden ratio. And I think you see Fibonacci also in architecture shapes, right? I think even in the shells, there's Fibonacci, right? So it's also in math, right? So essentially, these levels, once they're usually strong support and resistance levels, and they work best if, for example, it lines up with the moving average or it's lining up with the horizontal support level. Usually, those are higher probability support and resistance levels. So next. So here is an example of flying Fibonacci. So here we have an existing up wave, diba? So there's an up move. Then what you're using Fibonacci for is you're trying to time the pullback. So once it starts pulling back, to which level kaya will it bottom out? So here we can see that RCR, it bottomed out at the 61.8 level. So that's the Fibonacci level that it respected, right? So there. So next slide. So here is LTG. So it's just the same, right? So you have an existing up move. Then from there, you're trying to find the higher low. So here it also is 61.8 level. And if you backtrack, it's also a key support level that it has respected in the past, right? So when you add those two layers together, parang it becomes a higher probability pullback trade. So there, next. So next is how do we use Fibonacci in setting target prices? So here, what we do is we reverse the fib. So how we usually do Fibonacci is you plot it from the low to the high of an up move. But for you to set targets, you reverse it. You find the high from the high to the low. Then you enable the 1.618 level, right? So what that will show you is what's the potential target price if the stock does make another up move, right? So here is BPI. This is what we did for the dividend harvest portfolio, I think last year. And once the price hit the 1.618 level, we decided to sell our BPI shares. And let's see what happened soon after we sold it. Next slide. So here we can see that it really took a while for BPI to recover after hitting this level, right? So that's really the power of using Fibonacci, right? You can see hidden resistance levels, and I believe there was no evident resistance level at that time because that is BPI's all-time high at that time. So that was a good way to set a target. So next. So that is actually it for the indicators. So for now, we will just be doing a short demo on how do we actually apply these indicators in our charting platform in the video.
Show you how to find and add these indicators to your chart.
Yep. So just give us a while we set up.
Full screen.
Okay. Oops. Wait lang. Oops. Auction. Okay, there. So here we have our trading view. So how do we get there? So you open a workspace, right? Then from market, you click trading view chart. My bad, wait, got disconnected. So let's do that again. So from the workspace, you can name it anything. So I'll name it TV chart. Then from market, click trading view chart. Then from there, you can enter any symbol. So let's say, think of a symbol, Franco.
Meralco.
So let's look at Meralco. So once you click the ticker, the chart shows. So here is the trading view chart. So let's add some indicators. So for Meralco, so here to get indicators, just click indicators. Then
let's add what? The moving averages, RSI, and maybe the Bollinger Band.
okay. So here is the moving average. So once you input it, you can edit the settings. So let's do that.
By the way, what Jarrod did there, he did a shortcut. Instead of clicking SMA multiple times, there are options for moving average triple or moving average multiple, which essentially just adds 3 to 4 indicators for you already.
Yep. So here I'm adding three moving averages. Then I make it the 20, 50, and 100-day moving average. Then when I go to the style, I can edit the color. So for me, I like it blue for the 20-day. For the 50-day, I like it orange.
I always stick to the RGB.
Then for the 100-day, I like the pink. So there we have the moving averages. Then here, okay, so
we're just going to fix some issues right now.
Yep.
All right. So while that happens, let's talk about some other indicators. I'll look at the questions right now, some of the comments, before we formally answer a lot of the other questions. I read here another indicator, the average true range, ATR. So that's another volatility indicator. It's basically used to determine how much or how volatile a stock moves within a certain period or day. And then the line just indicates the average of that volatility.
Okay, I think we're ready again.
Actually, we can show you the ATR later on when we go back to the demo.
Okay, we're back. So sorry for that technical difficulty. So here we have Meralco, and once I pull up the 3 moving averages, what can you say about Meralco, Franco?
It's in an uptrend.
Yeah.
And every time it consolidates, the moving averages get tangled up or get closer to each other.
And parang lately, it's respecting the 20-day moving average, right?
In recent up move, yeah.
So here you can see that it's bouncing, here. So here you can see that it's really supported by the 20-day moving average.
Can we show MWC real quick?
Okay.
That was the example I showed earlier. And then can you put the 200-day moving average?
So one more. So moving average. So let's change the setting to 200. Then let's make it purple. So there. Here's the
So as you can see, once in around September, before the year was over, it did go back. It did fall below the 3 moving averages and then back to the 200-day where it found support and then continued to rally.
Yep. So around here. So it was being supported, and there. And another tip is that you can also hide the moving averages. So just go here. There's a hide option there. So when you click it, the indicator disappears.
Yeah. All right. Let's add another indicator.
Okay.
RSI, maybe.
Okay, RSI. So here is the RSI. Oops. Okay, so what can we observe? So here we can see that the RSI is above 50, right? It's hovering above 50. So that confirms the uptrend of.
And right now, the more recent RSI print is trading closely above the neutral level. And if you look at the chart, Meralco is in a pullback. And I feel like it will consolidate for Manila Water will consolidate for a while. Sorry, I meant Manila Water, not Meralco.
So yeah, if this goes below 50, it might form another base, I guess, or maybe test the 50-day, right? So that's the next support. So there.
Just real quick, can we add the ATR? Because someone brought it up. It's this indicator we did not discuss, although it is a volatility indicator, which is a bit helpful when you just want to figure out how volatile a stock can move.
Yep. So how the ATR works is like here, the number is 0.7. This means that each candle, the volatility of the candle is usually 0.70 centavos. So it could be 0.70 pesos higher or 0.70 pesos lower during the day, right?
Let's change the color because right now red is not working well with the black background.
Let's make it
white.
Fine, white.
Yeah.
So there. So here. So what this means is the candle's volatility will be around 0.70 pesos per share. So it can be in either way, either up or down, on average, right? So that's what you can expect.
Do you want to try putting your favorite indicator and can we look at plus?
The Bollinger Band?
Yes.
Okay.
And then after that, we can go to the questions, the Q&A portion.
Okay, so Bollinger Bands. So here is Bollinger Bands. So here you can see it constricts, then expands, constricts, then expands. So there. This looks nice. What else? What?
Fibonacci.
Let's look at one more.
Oh yeah, we should, Jarrod, let's show them where to find the Fibonacci retracement tool.
Okay. Pero let's take off another stock first.
RCR.
Okay, RCR. Yep. So here we have RCR. So where do we find the Fibonacci? Look to the left. Then here you'll see this one. Click that, then that's your Fibonacci. Then what you do is you have to identify a low and a high. So I identify this as my low, and I identify this as the high. And then wow, look where it bounced.
The deepest correction or pullback was smack at the golden ratio at the point.
Yep.
But when you do other charts, this won't always happen. Sometimes the support will be at the 50, a 0.5 or 0.38. It really depends on how the stock moves.
Yep. And if you notice, parang this key support level, and it's at the lower Bollinger bands where the bands are wide, right? So this was really a good time to enter RCR.
Yeah, that would have been a good entry point.
Yep, and I actually bought RCR.
Yeah, actually, when that happened, Jarrod and I added to our positions in RCR.
Yep.
Personal positions.
Yep. So this was a great tool to identify this good buying opportunity. So there.
All right. I guess now we can move on to the Q&A.
Yep. So let's go.
All right, let's answer the first question. As a position trader, what is the best indicator and time frame to use? I think it's the daily time frame.
Still the daily.
Yeah.
You want a bigger picture, you can go to the weekly chart, just so that you have a more macro.
I think a good approach is top down, where you look at the monthly or weekly to get the big idea, and then you go to the daily to execute your trade, to find that entry or sell point.
Yep.
As for the indicators, what do you think, Jarrod?
I guess if you're a position trader, more likely you'll use trend following indicators. So MACD, moving averages.
Yeah.
Then if you want
RSI,
if you want breakout entries, Bollinger Bands, it's always the best when the Bollinger Bands constrict. Diba?
Yeah.
So there.
Let's go to the next question. Would you be able to rank which indicators do you check and use from the most?
I think by default, moving averages. So that's what I use the most. Like for me, that's all I really need, moving averages. Then maybe sometimes. Then after moving averages.
Wait, can you repeat your answer? I think we had some choppiness in the Wi-Fi connection.
So by default, moving averages, they're always on my chart. But aside from that, I also like to have Bollinger Bands, since that's my favorite indicator. So those are the indicators that I always have. How about you?
Me, I always check volume. Every time I try it, before I always enter a buy or sell, I always check volume, then I go to the moving averages. And then I do have the Bollinger Bands, especially when I see a consolidation. I always check the Bollinger Bands after to potentially find a potential breakout on high volatility. And other than that, I would use the RSI. My least used indicator is the MACD. I still do use it when there's a trend, but more or less I rely on volume, the Bollinger Band, and RSI.
Yep.
All right. Next question. What's better suited for PSE stocks, slow or fast stochastics? Well, it depends. If you are day to intraday, fast stochastic, because it reacts faster. Because the slow stochastic will filter out the short-term volatility and noise. which is more useful when you are looking at the bigger picture, longer time frames, and if you're tracking the PSEI index. Fast stochastic, it depends, right? It depends what time frame and stock you're looking at. If you're looking at the index, I would say slow stochastic. If you're doing intraday, you would use the fast stochastic.
Yep. But for me, I think by default,
It's this.
I just use the normal stochastics.
Yeah.
By default. But I think Sir John, stochastic RSI, which I think it smoothens out the signals. Which
Yeah.
is maybe you can explore that too. But for me, I just use the regular one.
All right. Which is, I guess, the RSI 14.
Yeah.
Just the basic, yeah. Next question. I saw standard deviations were used in PE ratios and Bollinger Bands. What does this mean? Why is the two standard deviation commonly used? In statistics, 95% of the distribution is within the two standard deviation from the mean, which is why it's used, because most of the data points are within this two standard deviation. So when a certain, so for example, if the PE ratio of the mean is like 15 and it goes to 20 and it's above the two standard deviation, it means it's overvalued. And from the mean, it goes down to like 8 PE, 8 times, and it's below or close to the two standard deviation. That means it's undervalued. So that's how and why they use the two standard deviation.
Yep. But you have to be careful, Rin, because sometimes they're a value trap and sometimes the business model has changed and they deserve a lower PE multiple. So baka you're comparing it to the average, but that average is influenced by higher PEs when it was a different when it had different prospects in the past years. Baka current PE, it deserves a lower multiple. So that's something that you have to be careful about, the value traps.
Yeah. All right. Thanks for that question. Let's go to the next. Oh, yeah, we did discuss the average true range.
Yep.
Yeah. Okay, let's go to the next question so we answer more. What indicators do you suggest beginner retail investors can use to enter a position for investing?
So, stochastics. I guess it's helpful if you're trying to buy the dip, right?
Yeah, especially if you're tracking the index, for example, on the pullbacks, it's nice to use the stochastics for a buy signal.
Yeah, so parang draw your support levels and have your moving averages. Then once the price dips and then you see na oversold na sa stochastics, right? Then you can actually try to catch it na there, di ba?
But
Basta
you know,
underline no.
Always keep it simple. You should not have like 5 more indicators in your chart. I would suggest volume, which is pre-standard there. So you can add. I'm going to repeat the answer because there was some unstable connection. I got that. So all I'm trying to say is that keep it simple if you're a beginner. Maybe I'd start with the moving averages, and from that, maybe the MACD, the RSI, and then the Bollinger Bands. So just try to keep it simple because too many indicators will create so much noise and you might get contradicting signals and it will affect your ability to execute trades. So what were the first 3 indicators you learned, Jarrod, or the first 3 you used?
Moving averages, MACD, RSI.
Yeah, it's about the same as well for me.
Yeah, that's the standard.
Yeah, those are the commonly used ones, and that's what everyone will tell you when you start learning about all these indicators. Let's go to the next slide. Next question. Can you please demo Bollinger Bands together with Fibonacci retracement? I think we did that with our RCR, but maybe we can try again.
Okay, sure. So here is our RCR, right? So
yeah, I guess you can show both sides of it, of the Fibonacci retracement.
So here first you have to the Fibonacci is here on the left side. So it's here, click Fibonacci. Then next is you have to identify your swing low and your swing high. So for me, I identify this as the swing low. This is the swing high, this high here. And there, parang it lines up with the Bollinger Bands, right? It's at the lower Bollinger Bands. There's a support level right here. So for me, there's a lot of confluence here. Plus you have a hammer candlestick, diba? If you know your price action. Then you have your optic here. Then this was a good buy.
Let's try the finding the potential take profit from that high to where we first bought, where we entered on RCR.
Okay, so
Yeah, from about 672 to 610, I think. Let's try. Let's see what the potential take profit level is on RCR.
If you're trying to find like yung potential take profit, you do the reverse fib. So you just flip it around. So you're trying to find the high point to a low point. So let's say I identify this is the high. This is my low. So there we have so this is the golden ratio, the 1.618 extension. And if you can see, it is right here near the top. And you can also use Bollinger Bands for this because the bands are wide and then it's at the also if it's at the upper band, it means it's overbought rin, diba?
There's a confluence between the Fibonacci retracement tool and the Bollinger Bands.
And here you can see that it's a high long wick candle, right? So you might have sold right here now once it resisted this level.
Can we try drawing a Fibonacci retracement from that level to the 613 level or 610? The pullback, can we see the potential take profit if we entered, since we entered around the pullback, right? So what's the potential take profit level on that?
We see here, target would be around 7.13. So where is that? Okay, then we can let's draw a line. Let's see if
it lines up with any other resistance levels.
So here
it does.
Yes, here parang previous high here, support here. So yeah, that could be the next target for RCR. Pero my target is 7 pesos for RCR.
Which is not that far from that level.
So maybe you can draw your range of what, 7 to 7.13, diba?
Yeah, that could be the potential take profit on the next move up.
So 7 to 7.13, that's your resistance level, right? So there, if it hits 7 to 7.13, maybe you can consider trimming, diba? So there.
Yeah. All right. I hope that helps a lot, and we'll go back to the questions. How many indicators in parallel is the DragonFi trading view access allowed? I know not every single indicator from the actual trading view is on our trading view charts in DragonFi, but majority of the most common ones are there already. You won't find the custom-made ones because I know in TradingView you can find custom-made indicators. That we're still working on.
Yep, you cannot make your own script to make your own indicator for now.
So we have all the preset and commonly used indicators, and you can add as many as you want, but I suggest you don't do that because it becomes too cluttered and it's just so hard to see your stock chart already.
Yep.
It looks messy. All right, let's go to the next question. Any recommended indicator that is not lagging? I think most indicators are lagging indicators.
Yeah, I guess
because they're all calculated using historical data.
Yeah, I guess if you want indicators that could signal something in the future, I guess Bollinger Bands. I mean, if they tighten, parang you can already expect na there's an explosive move either up or down. Kasi volatility has shrunk. So once mag-expand yung volatility, you can already expect na there's a big move up or a big move down. Then I guess Fibonacci, right? you're trying to time the higher low. So medyo you're trying to hindi siya lagging, right? Because you're projecting it na eh. Also the Fibonacci target, right? The golden ratio. You're projecting the target in advance, right? So if you consider that not lagging, then yeah, I think those match. But like mga RSI, MACD lagging. Another one is divergences, di ba? Parang you can sort of parang think that there might be a reversal soon if there's a divergence. But other than that, most of them lagging talaga.
All right. Yeah, so it's how you use the indicators, I
Yep.
guess. All right, let's go to the next one. There are so many indicators. How do you decide if you get conflicting signals? Is it the majority? Are there more important indicators or are they all equal weight?
For me, just go back to the basics. What's an uptrend, right? Higher highs and higher lows. What's a downtrend? Lower highs and lower lows. So, example, I see bearish indicators, right? Parang my cross down, overbought. Then I would look, is there a lower high na? And is it forming a lower low? Once I see that, edi, that's all indication I need, diba? Parang back to the price action. But it's not forming higher highs, higher lows, then that's my signal na to exit,
Yeah.
diba?
Yeah, exactly that. But I would only add that if it's really too conflicting, I would always revert to price action.
Yep.
Yeah.
And you also can look at the fundamentals yun, right?
Yeah.
Kasi baka sometimes there's a bearish signal on the chart, pero fundamentally, there's nothing wrong. So once it breaks down, parang that's just the correction. That's a buy the dip opportunity, di ba? Not
Yeah.
a sell. So talaga context matters. You need to know the context of the fundamentals. And it's not just all charts lang, right?
Yeah. We'll show you in part 2 how we do it.
Yep.
All right, next slide. Why do we need to have 3 MAs? You actually don't need to have 3 moving averages. It's just what we commonly practice here. It's really up to you. You can have 1 or 2 or 3 or 4 or 5. But it's helpful to have more because not all moving averages will be the most reliable because as mentioned earlier, if you're trying to trail stop or follow the trend, sometimes it follows a specific moving average. It doesn't always follow the 20-day, it doesn't always follow the 50-day. So that's why having like, I guess, at least 3 is more helpful because you get a better sense of the trend and where potential breakdowns or breakouts will happen using the moving averages. But you don't always have to have just 3.
Yep.
Yeah, I guess that's it. All right, next question. Can we save indicators on DF TradingView? Yes, you can.
Let's demo it.
Yeah.
So here, so let's say I want to save this. So I already have my Fibonacci there. I have Bollinger Bands. Let's say I want to save this chart. I just click save, right? Then let's say RCRTP.
You can find the save icon in the top right corner of the
then
chart.
it's here na. So example, oops, wait lang. Oh man, wait.
What's happening?
It's lagging, baby. Let's say, okay, I delete the workspace. I'll open a new trading view. Oh no, wait. It's not loading. Wait, let me refresh. Oh no.
I think there's a connection issue at this time again.
Wait.
Sorry about that, everyone. Thank you for your patience.
Oh no.
It's yeah.
Wait, let's type something. GS. Yeah.
All right. But essentially, you can save the indicators using the save icon on the top right corner. and then you can load that same layout on other charts across
Yeah,
workspaces.
even if you delete the workspace or you delete the
the chart,
widget,
yeah.
right? You just open another. Oh, there, it's working now. Is it?
It's just
Wait, that's never mind. It's not.
fake news, Jarrod.
Okay, just trying. Okay,
All right.
next.
Next question. Would you recommend RSI 14 or RSI 30? I would simply recommend RSI
The
14.
default na lang para.
But it really depends on your trading strategy. If RSI 30 fits your style more, then go for it. But if you're starting, I would recommend sticking to the standard standard. It's a good starting point, and then from there you can start tweaking it on your own. Like for example, sometimes we do tweak our Bollinger bands. We change the moving average or the width. Yeah.
Yeah, but I think it's better to use the default because more investors, more traders are using the same default setting. Eh. So
Oh yeah, that's true.
if more people are following the same signal, the more price will react.
Yeah, I mean, if you had to generalize, then yes.
Yeah. So they're default na lang.
All right. Next question. There are over 300 stocks to choose from daily. That's a lot. How do you narrow down your choices? Actually, I think there are less than 300 tradable companies.
Yeah. First is filter it by volume. So around 5 million value traded. But for me, sometimes I go to at least 1 million value traded in a day. Then what I do is I go through them all because I already know what I'm looking for. So parang skip. I do it fast. I think I can chart the whole of PSE stocks in like less than 10 minutes, maka 5 minutes pa nga. But that's a good filter by value traded. Then when you go over it, you'll realize there's not that much stocks naman
that are actually worth. Like if you want to start, I would suggest looking at the 30 members of the PSCI, and then you can check the DivY index of the PSE, the members, and then you always have your REITs. If you're a dividend investor, you will more likely always check the same stocks over and over again because there are only a handful of really good dividend-paying stocks in the Philippines. And then if you're a trader, you always want there to be volume and volatility, right? You don't want to trade liquid stocks unless maybe you know something, but more or less volume is a good filter. And then if you want trending, you can always check moving averages. And then if you want for dividend investing, always start with the PSCI 30 because most of them are actually dividend-paying stocks. And then you can expand to REITs and then the PSCI DivY stocks because it's specifically made for dividend investing.
Yep.
All right, let's go on to the next question. We have 5 minutes left, so we'll answer as many as we can in that time frame. What's the best indicator to use as a signal for entry and exit? Do you recommend using lower time frames? For the first one, yes, we've always. Are we okay? I think the internet's back. Just to repeat, based on our experience and based on our more research, we've always used the Bollinger bands for entries, and then for our sell, we always check averages and we draw resistance levels.
Yep.
And then also the Fibonacci retracement tool. That's more go-tos.
Yeah, same. For me, Bollinger Bands talaga. For me, it's really a very powerful indicator. Then should you use lower time frames? For me, just the daily. I think that's the lowest I would go. Unless you're right, then
Yeah.
I would go to range. But if you're just trying to ride the trend, right? Or like
Although if
long term daily.
if you want a more nuanced approach to your entry and exit, and you want to be very precise, I would suggest maybe going down to the 1 hour time frame for just to get that exact moment where it starts to break down. Then you can use that to exit. But pretty much we would always just use the daily time frame for an exit. Yeah. Next question. Does an oversold RSI level indicate it's a good time to buy?
Not necessarily.
Yeah. Same goes for overbought RSI levels.
For me, watch the support level because baka it's tested the support level like 4 times na because that could be a breakdown candidate na. So you have to watch it carefully. So not because it's oversold, it means it's gonna bounce na, right? So you have to be mindful of that.
Sometimes you also have to check the fundamentals. If maybe there's a catalyst for it being oversold or for it being sold down, right?
Yeah, and more often than not, you want the RSI above 50. If it's below 50, that means it's not trending up.
And this is where other indicators come in, and other tools will help you determine whether or not it's a time to buy.
Yep.
Yeah. But in theory, it can indicate it is a good time to buy.
Yeah, in a really market talaga.
But in application, it will vary depending on context.
Yep.
Yeah. Next question. Last two questions because we are running out of time and we have to announce some things. What combination of indicators do you suggest for day trading and medium-term trader? For the medium-term
trading, buy when oversold, then sell when overbought. Yeah, so I think stochastics is good for day trading because you just try to buy when it's oversold, sell when it's overbought in a short period of time. So I think stochastics will work well for day trading.
For medium term, I would rely on the moving averages and MACD or the stochastics actually, because MACD is very helpful in trending markets in shorter time frames. Our stochastics also helpful, and then moving averages for that dynamic support resistance levels for the medium term. Yeah. Let's go to the next question. This will be the last question. What is your length of your Bollinger Bands?
The default.
So that's a 20-day moving average.
Yeah, 20-day, then 2 standard deviations.
Yeah, that is the more or less our settings for the Bollinger Bands.
Yep.
I used to actually shorten it to act as my 50-day moving average, but then I found that less helpful, so I reverted back to the original 2 standard deviation and 20-day entry levels. All right, so that concludes our Q&A portion. Thank you to everyone for attending and sending in your questions. If you have more, please reach out to us, email us. We will do our best to reply to you on time. Or just message us on Discord, by the way. If you guys are not on Discord, please join our Discord channel. Yeah, you can tag us. You can just tag us and then we'll reply to you if you have any more questions. So that concludes our part 1 of this webinar series titled Winning with Charts. Part 2 will happen on Feb 26. Oh wait, not Feb 26. Sorry, that's May 14. That is incorrect date. Sorry about that. May 14. Next week. Part 2 is happening next week, May 14, 5 p.m. same time. And this time we will be talking about putting them all together, how you can execute your trades. This is actually part of our old webinar. Can we go back to the first slides actually? That's where our outline is.
There. It's already fixed though.
Okay. No, this is how to execute your trades.
Oh yeah. Oh. Oops.
There, okay, yeah, there. Part two is all about putting all the tools together. So there we will delve deeper into combining all these indicators with fundamental analysis. So you can expect there to be a longer dedicated time for a demo because it's just better that way to discuss how each indicators can work well with others. Yeah.
Yep.
All right. So scan the QR code if you want to register for part two. Yeah. So don't forget to follow us on TikTok, Facebook, and if you want to rewatch this webinar, you can wait for it to be posted on our YouTube channel, DragonFi HQ, and then with that, maybe we'll see you guys in our market mornings on Monday, where Jarrod and I always talk about the market.
Yep.
In case you want to ask follow-up questions, you can ask it there because we'll be able to respond live. Other than that, thank you everyone for joining. Have a good night.